Hello everybody and welcome to Project Trade. This is the Technical Indicators show, and in this video we're talking about the bulls and bears power indicators, a classic pair of lagging trend signal givers. These indicators were created by Dr. Alexander Elder in 1989 and unleashed onto the world in his book Trading for a Living. The bulls and bears power are often set out as two separate but similar indicators which sit beneath your price chart as histograms. Although separate, they are largely designed to operate in unison with one another. Depending on what platform you use, you might see the bulls and bears power put together into a single oscillator style indicator. When this is the case, the oscillator is often known as the Elder Ray Index. The part of the name Elder Ray is designed to make it seem like an X-ray, implying excessively that the indicator can see through the price chart to its radioactive core, and therefore is a better interpreter of price than those other indicators which can't see through the price into its radioactive core. +1 for marketing and branding. In terms of how they operate, the bulls and bears power are both heavily influenced by price from the current period and the value of an exponential moving average. If we take it to the formula, we can see that it's fairly basic. This is with the default period input of 13, which Elder typically used. For the bulls power, the final value is derived from subtracting the value of a 13 period exponential moving average from the high in price for the current period. Symmetrically, the bears power subtracts the value of a 13 period exponential moving average from the low in price for the current period. Here's what they look like beneath the typical price chart. Of course, they are quite similar in appearance, as the difference is only the high in price versus low in price element, but you can understandably see that the bulls power prefers to stay above the zero line a little bit more, and for the bears power it's a touch more on the downside of the zero line. We'll be sticking with Elder's settings with 13 period input throughout, but your platform should give you access to change the period's input. It doesn't have to be the 13. Then finally, for our histogram colors, it's just green for the bulls and red for the bears. Makes sense. And just so you can see it, here's what those same bulls and bears indicators look like when they're put together into the Elder Ray Index. Some may find this style easier to read than the histograms, and others may prefer the histogram look of the separate bulls and bears indicators. If you have the choice of style, I would recommend following both your heart and your gut to which one you feel is ultimately the better choice for you. Signals wise, as we've said, this is typically a trend following indicator which is mostly used to help either follow or confirm a trend. Old Man Elder also liked to use a 13 period exponential moving average on the chart itself to help signal him on the trend. So if the moving average is sloping upward, it would signal an uptrend, allowing for buy trades, and if it's sloping downward, then it's a signal for sell trades. If you've confirmed from the exponential moving average that you're looking for a buy signal, then you'll want the bears power histogram to have a reading below zero, but have both the bulls and the bears powers rising in value. Easiest to show through a chart example, so here you have a bullish trend we got in on. First off, we can see in our bears power indicator here, the value is beneath zero, but has been rising for a few periods. Then we can look to the bulls power histogram and see that it too is rising. It doesn't matter if it's above or below zero. Point is, it's on the up and up. Then we can just confirm with our moving average that it is in fact sloping upward, so we've got the full package ready to buy and get into a winner. Naturally, we hold the trade all the way up that nice run up over on the right and sell just about at the peak, but the signal would give you profits anywhere. That's our buy trade. If you are, however, looking for a sell trade, you'll just want the opposite signal, so you'll need the on chart EMA sloping downwards, have the bulls power be above a value of zero, but have both the bulls and the bears indicators falling in value. So here's our cherry for the bearish trade. We have the bulls power just above the zero level over here, but it has been falling and quite quickly too, still above zero though. So we look to the bears power and see that too is falling in value over those same few periods, and the exponential moving average is sloping down, putting us in bear city. We've got all three elements green lighting the way, and it's profit again for us anywhere down the line. Irregardless of how long it took us to find a prime example like this, it does make the indicator look pretty good, doesn't it? No hard data provided. It's not all about the trend though. I wouldn't try and box in the bulls and bear power indicators like that. You can look for reversal signals too, based on the indicator having divergence. Now, although good divergence signals are rare, they can still help you in a technical assessment of the market. Divergence is split into two types: bullish divergence and bearish divergence. For a bullish buy signal, you need to see a lower price formation compared to a previous trough in price, but in that same period have the bears power indicator at a higher value than before. Naturally then, it is just the opposite for a bearish divergence sell signal. Price needs to be at a higher peak than previously, but the bulls power indicator is giving a lower value than it did at that same last peak. Thus, the two are divergent in a bearish fashion. Here's an example of each divergence type. We'll start with the bullish divergence. Typical price price chart just got the bear's power histogram pulled up, as we don't need the bull's power for bullish divergence. We first look at this low in price here and this low in price which follows around 10 periods after, and we can see clearly that the price has dropped between the two troughs. However, on the bear's power histogram over that same reference period, we can see the indicator has not in fact made a lower low, but instead has made a higher low, thus indicating divergence. Hopefully there's a good profit taking system in there, because we do see some green candles follow our entry. But wait, if we now look to this next low in price over here, we can see that the price has continued to make another low even deeper than previously, yet the bear's power indicator has continued to make higher lows in its readings. That's a double divergence we've snagged there, and again plenty of green candles follow for profit taking chances. It's a good day for trading divergence. Next, for our bearish example, we're initially looking at this peak in price over here, which is followed by a second peak in price over here. We can measure it out to be certain, but it is clear that price has increased between those two peaks. However, when we observe the same time period occurring on the bull's power indicator, we can see that it is not in agreement with that increase in price. Instead, it's formed a lower high in its reading compared to the previous peak. That would be the bearish divergent sell signal, and on this particular chart it has worked out well for us. Good to see, and that wraps up our main entry signals. The bulls and bears power indicators can operate as exit indicators too, to help you attempt some money management though, although I'm certainly not swearing on their ability to do this well. The most obvious thing to do would be to reverse your entry signals into exit signals. Say you've entered in on a buy trade because the EMA was sloping up, the bear's power was reading under zero, and both the bears and bulls power indicators were rising. You could say that losing any of those elements will take you out of the trade. That means if the EMA begins sloping downward, you would close the trade, and if the bears or bulls power values start falling between candle closes, you'd exit out for that as well. Your initial all good signal has gone. If it is only one of those three elements that's changed for you, you could then wait to see if they realign before jumping in another trade one way or the other, back to using it in its entry fashion. Then nothing different if you were in a sell trade, you would close it out if the EMA turned upward or if the bulls or bears readings are rising. There is also the zero line crossover on either indicator for general market sentiment observation too. If for example you have both the bulls and bears indicators cross beneath zero, then you can be certain at least that the recent trend has been downward. Therefore, you may want to exit out of any buy trades that you're in. Naturally, it just switched in reverse. If you're in a sell trade, watch out for both indicators crossing above zero, and hopefully by that point it isn't too late for you. Once you get into the market and onto the charts, feel free to give the Elder Ray Index a go on any asset you choose. Just be sure that if you don't have experience trading on a particular asset, you might want to paper trade on it first. Also, Elder typically used it on the daily time frame candles, although he did have a bit of a penchant for the weekly time frame too. Again, it doesn't mean that you can't plug it in on any particular 1 minute time frame and just pray for success. As we mentioned earlier, your platform should give you the option to change the period inputs of your powers, but it is still recommended to keep the period inputs for the bulls and bears power as the same, so that they continue to work in tandem with one another. If you're going to just have an 8 period input for the bulls power indicator, probably best to just have an 8 period input for the bears indicator too. It is your strategy though, and if different period inputs works for you, good job on that. One major limitation that you are likely to find chasing trends in the market is the detrimental impact of doing so when price is in a range. This is because those exponential averages all over the Elder Ray Index strategy are still lagging indicators. So just as the indicator thinks price is taking off, back it comes into the range, taking your stop loss with it. Here's an example of a particularly nasty price range. You can see both the bulls and bears power indicators chopping back and forth regularly across that zero line. Any signals you are taking, you better be ready to get some quick profits from them, because on a lot of these you are going to be getting in just too late, and you'll be watching price walk out on you in the opposite direction. This is the heavy suffering that lagging trend-based indicators face on a daily basis. Now onto a note of similar indicators to the bulls and bears power indicators, and I just wanted to start by emphasizing the value that Alexander Elder put onto the exponential moving average. It's present in the formula for both indicators, as well as often being present on the chart itself. The key to understanding the Elder Ray Index is through the exponential moving average. This is the indicator that's guiding your signals. Take heed. Another indicator created by Dr. Elder was the Elder Force Index. Try not to confuse these two. Although made by a similar man, they do have different approaches to the markets. The Force Index subtracts the closing price of the previous period from the closing price of the current period, then multiplies that figure by the volume for the current period. An average of those readings is then used to smooth out the final value. The indicator oscillates around 0, a reading above 0 meaning that there is positive force in the market and prices have been rising, and a reading below 0 means that there is negative force and that prices have been falling. Here's what that force index looks like on a chart. You will hopefully have the option to change the period input and moving average type. Note again, Alexander Elder by default enjoying the readings of the 13 period exponential moving average. He's a big fan of it. If you don't want to have the 0 line, you don't have to, but it should help you get a quicker read on where the indicator is at. Similarly to the Elder Ray Index, the Elder Force Index can be used for either trend confirmation or reversal signals through divergence. Both the Elder Ray and the Elder Force can be set up together on your price chart to help confirm your entry signals. There are many other indicators out there which have a similar function or appearance to the bulls and bears histograms. For example, you can look at trend or momentum indicators such as the MACD, the absolute strength histogram, Bill Williams awesome and accelerator oscillators, and many more. These indicators show histograms with a 0 line to distinguish between a bullish trend or a bearish trend. Although the formulas and strategic approaches to those indicators differ, if you're looking for something similar in a trend-based indicator with some divergent potential presented through a histogram, those are a good place to start. In conclusion, can the Elder Ray Index actually see through the markets and the price charts like an X-ray does? I'm not so sure. I would still recommend a professional radiographer for your X-ray needs. Still though, it's out there in the world with signals attached to it by the creator. Although he didn't back himself up with actual statistics proving the indicator's success, Old Man Elder did engage in a somewhat convincing amount of anecdotal evidence if you're not a cynical person and have never used the indicator before. The essence of the Elder Ray Index is that it is a trend hunting indicator that tries to find those trends early. This is exemplified by the fact that it uses a quick responding 13 period exponential moving average, but also tries to take its signals on the opposite side of the histogram. So a buy trade has to have the bear's power below 0 and a sell trade has to have the bull's power above 0. Not even waiting for a 0 line cross as confirmation. With something responding that quickly, you are going to get a lot of false signals, but if you can reduce the impact of those false signals and make the true signals that you get count with a strong money management system, then you might have a shot at making this one become profitable. As we've explained in this video though, there's more to this one than simply hunting trends. You can look for reversal signals through the power of divergence. You can use it as an exit indicator for your trades. It's all there for you if you believe in the power of technical indicators. That is everything for the bulls and bears power indicators, but if you do want more information on the indicator, then you'll be able to find some of that no problem. Just take a look in the video description. And never forget that every single chart we show you has been completely pre-selected. They are not in fact arbitrary price charts where examples are plentiful. We search very deep into those charts to find the moves that show us clearly making maximum profits as if the indicator is a winning lottery ticket. Not the case, but we have traded the bulls and bears power indicators in live forward testing, and those videos will also be linked in the video description. Thank you for watching. This is Project Trade. I am Bernard's Watch, and there will be more.